SP Tulsian as well joins us now to give us some fundamental ideas. Mr. Tulsian, good afternoon. Thank you very much for joining. Any of the mid-cap stock numbers that stood out for you? I mean, we were discussing Nilkamal and such other numbers. Even I think Mithon Alloys. Anything that you want to point out to us? Mr. Tulsian, you can hear me?
Yes, I can.
Yeah, I was just asking you if any of the mid-cap numbers stood out for you. We were discussing Nilkamal and Mithon Alloys earlier in the morning. What worked for you over the last 72 hours, the numbers that came out?
Lata, whatever numbers we have seen, good numbers already, the market has, given a thumbs up to all those numbers. You can add the results of GLAN also in that category apart from Mithon Alloys. And if you see the Tirumalai Chemical, in fact, those numbers have been very good. And in fact, that is because of their key raw material. And in fact, sometimes, and as you have added for the Mithon Alloys also and Nilkamal Plastics, they all have shown very good numbers. And that's the reason, in fact, all of them are doing quite well today. Yeah.
Okay, Mayuresh Joshi of Angel Broking is also with us. Mayuresh, the two stocks that have literally soared in the last fortnight, one of them is Yes Bank at a new high right now of 970 and Asian Paints at 950. Which one do you think offers better value now over the medium term?
No, Sonia, I think one again has to understand that both these stocks are working in a very different environment. For Yes Bank specifically, I mean, all the banking mess that we have probably witnessed over the past so many quarters has been very, very resilient. Look at the asset quality, look at the capital adequacy, look at the market share gains that it is making on the CASA account. So I think on all counts, Yes Bank is gaining market share. The loan growth has been exceptional. And again, I think the balance sheet strength is simply there to probably exploit opportunities once credit growth returns to its full potential. So Yes Bank, again, I think time and again has been my recommendation to hold this stock. The valuations at the current juncture looks a little bit rich, but it's a clear hold for investors holding at lower levels. Similarly for Asian Paints, the kind of volume growth that the company has posted this time round and with the kind of cut that it has taken into correlative prices, my own take is that volume growth will still see a fill-up going forward. Couple that up with if good monsoons come through and are expected, as one really assumes, one can see repainting demand come back in a big fashion in tier 3, tier 4 cities, rural areas, and that has a huge impact in terms of how the top line grows. Clearly, I think the home improvement segment is where the investment phase of the company is. So on the bottom line, it is still in the red. But again, I think the segment is expected to do pretty well, assumably because of rural demand coming back and urban demand staying very consistent going forward. What happens with the aggressive entry is going to be very, very interesting. And though valuations in excess of 42 times or 517 look a little bit stretched, my own take is that this stock is a premium stock and the numbers were fantastic in my opinion. And investors again holding on to this stock should continue holding.
All right, thanks for that, Mayuresh. At the moment, still more ground being gained by the banking stocks, you will have to say. At the moment, the cut is now down to about 0.4. It had even gone down to 0.38. So, decent ground being made by the banking stocks. And prominent among them are the ones that even Mayuresh discussed, HDFC, Yes Bank, ICICI Bank, IndusInd, Kotak Mahindra, HDFC Bank, all of them gaining significant ground in the past 15 minutes. Let's take a break. Coming up, we will discuss, of course, all these intraday movements as well with our chart experts. We will also be joined by our Alpha Manager for the week, Shreyas Devalkar of BNP Paribas Mutual Fund joins us with his views on the market. The fund he manages, BNP Paribas Midcap Fund, has given a 30% return in the last 3 years and has been one of the best performing funds in the midcap space. More from the expert on the other side.
And our closing bell money control question of the day is, it is 2 years of the Modi government today. Has it lived up to expectations? Log on to moneycontrol.com, post your responses there, and we will read out some of the most interesting responses post 3:30 p.m. today. Welcome back to the show. As promised, we now invite Shreyas Divalkar, the fund manager equities of BNP Paribas Mutual Fund. He is our alpha manager for the day and for the week. And some of his funds will come up for you on your screen. The best performing fund has been the BNP Paribas Mid Cap Fund, which has given you a 3-year return. I think the market is listening to your optimism as far as the private sector banks are concerned, because we have a big surge that we've seen in the last 5-10 minutes in names like IndusInd Bank, Yes Bank and HDFC Bank. Just take a look at the intraday charts there. In fact, IndusInd Bank has now hit a new high of 1085. Remember, less than 3 months ago the stock was 800 rupees and now it's well above the 1080 mark. So very good going. In fact, the market is soaring now. Absolutely. Almost 160 points in the green for the Sensex. It's conquered 25,600 with so much ease, and the Nifty as well is starting to flirt with 7,900 yet again. But here on our show we get you exclusives by the hour, and right now we have an exclusive breaking just for you. CNBC TV 18 learns that the Mines Ministry will finalize a transfer fee of 18 to 150% for captive mines shortly. It won't need a cabinet nod. Anshu Sharma joins us now to give us more details on all that she's picking up. Anshu, over to you.
That's right. We understand that Mines Ministry is working on a transfer fee for transferring captive mining leases which were not auctioned. Remember, just recently Rajya Sabha passed that amendment in the Parliament, which has paved way for all the cement deals. We understand that the Mines Ministry is looking at a range of 80 to 150% of royalty for that particular mineral as transfer fee for transferring mining lease of that particular mineral. We understand that the government is discussing this and understands that there cannot be just one transfer fee which can happen for all the minerals, since all the royalty taken from iron ore, limestone, copper, bauxite is in a different range, and the pricing is also different, since iron ore and limestone is priced in India, but apart from this, copper, bauxite, gold is based on London Metals Exchange prices. The proceeds from this transfer fee will go to the states, and we'll have to see how soon the government will come out with the rules, because post that the transfer fee will be notified by the Mines Ministry. Yeah. Back to you.
Anshu, thanks for that. Actually, the markets are in a real hurry. The bank Nifty actually is now in the green. Reversed all its losses of about 1.5% now, 16,725, and the Sensex and the Nifty are soaring, almost getting to 7,900. The Nifty 7,870, and the Sensex at 25,700, or almost there. It's a 3/4 percentage point gain. The advance declines now even Steven. Mr. Tulsian, I just wanted to get you on what Anshu is telling us. Is this going to become more difficult for companies to buy, have mergers and acquisitions in the cement space?
See, Lata, 2 points which Anshu has mentioned, that she has mentioned that 80 to 150% of the raw material price, or maybe the mineral price. I am unable to understand whether the government will estimate the total reserve which a mine is holding, and if that is so, I don't think that is realistic, because you have to work out the as it has happened in the case of the auction of the coal mines. It is you cannot calculate the estimated reserve of the mine, and entire amount is asked upfront. That is never feasible. So I am unable to understand the capital value has to be assigned, which will be paid in one go to the mining to the government, whether it goes to the state government or to the central government. That's number one. Number two, if it is seen on the realistic basis, because all these mines transfers are seen to be inevitable, I don't think that M&A things will stop, because if the M&A will not happen because of this stiff premium which will be asked by the state government or by the central government on transfer of the mines, then those will again get reduced, because this has been done with intent to ease the pressure of the NPAs, and to have the consolidation M&A space, getting allowing it to get take off. So yes, the amendment will come, and secondly, it has to be on the capital value, which will be paid one time by or maybe if it is deferred payment, maybe the interest element can get added, but I don't think that it will be calculated to 80 to 150% on the mineral cost. Yeah.
All right. In fact, we should get back to some of the other market internals as well. Ashwini, there's a fresh wave of energy that we are seeing in the mid-cap, or rather in the private sector banking space. HDFC Bank, Yes Bank, IndusInd Bank, all hitting new highs now. Does this space portend a fresh buy? And if yes, for the very short term and in the medium term, what do the charts look like?
First of all, Bank Nifty has come back almost 280 points in less than 1 hour. So that means some big buying has happened. I remember, at 2:30 I had a buy call on Bank Nifty. It was probably 150 points lower. So that means, some big buying is happening on private banks. So Yes Bank, IndusInd, Kotak, HDFC Bank, all of these guys can be bought. Do not go near the PSU banks. It appears that Bank Nifty probably at 16,500 has made some sort of a bottom, and chances are we could get follow through from here.
Okay, Sudarshan, this is a smart reversal. Anything that's moved into your radar now?
Well, HDFC, the housing finance company, is a buying opportunity. It's not a day trade because there's hardly any time left. But I think if you buy now and hold for a few days, it works out as a spring trade.
Ashwini, you did tell us that you wouldn't waste your money on Bank of Baroda when there are a whole host of other opportunities. But does that stock now find support at 140? I'm referring more from the point of view of many people who may be stuck in that stock.
That's for me?
Yes, Ashwini.
See, a stock is not a property where you are stuck. When you sell it, move into Yes Bank, IndusInd Bank, choices are right in front. Unless you are totally obsessed with it, BOB, there is no reason to stay there.
Okay. Well, I know the limelight is being hogged by a lot of the banks now, but some of the other stocks are also participating. We look at the intraday chart of Bosch. That one is back at 21,400. It's gained almost 10% in this month. So Bosch has come back very quickly to elevated levels of 21,400. If you pull up a 3 or 6 month chart of Bosch, you'll notice that less than 3 months ago it was just at 16,000. So there's been a significant up move in Bosch over the last 1 month. By the way, those are NBCC's numbers. They look pretty much in line with what the street was estimating. So EBITDA at 182 crores versus 180 crore of an expectation, and the net profits as well largely in line with what the street was estimating. So the stock as well is just about range bound, down 0.3%. Let's do one thing. We haven't taken a break in a bit because we were so obsessed with the market up move, but we'll come back in moments from now. Our closing bell money control question of the day is: it's been 2 years of the Modi government. Has it lived up to your expectations? Log on to moneycontrol.com, post your responses there, and we will read out some of the most interesting ones post 3:30 p.m.
Welcome back, and we are in a very interesting stage in the markets. At this point in time, still holding on to most of the gains notched up in the last half hour of trade when the markets broke into the green and then went on very close to that 7870 mark. At the moment 7862, and the Nifty, the Sensex up at 25,650. The Bank Nifty recovered over 1.5 percentage points and is now practically in flat terrain, was trading in the green. Significant gains made by private sector banks, which is why it is the Nifty Bank that's up and about. Sudarshan, anything in the mid-cap space now that attracts your attention, where you've seen fairly significant amount of ground covered intraday, or for that matter for a weekly trade?
Well, for a swing trade, it's not intraday anymore.
Yes.
But real estate stocks are coming out of that small correction that they had gone into. So both these stocks, DLF as well as HDIL, are opportunities. I must point out that the Nifty still remains in a trading range. So if you take these trades, be sure to have some kind of a stop loss.
Not India Bulls Realty?
No, but because Ashwini had already spoken about it, I thought there was no need.
Fair enough.
All right. Well, I just want to look at some of the sugar stocks as well, because so many of them have been hitting new highs today, 52-week highs, that is. Thriveni Engineering at a 52-week high, Rana Sugars, okay, that's a small one. Oud Sugars at a new 52-week high as well, and so is Balrampur Chini, up almost about 1.5%. Mr. Tulsian, you were telling us about how you need to see what the inventory levels are that many of these sugar companies have. We did speak with the management of Oud Sugar a couple of hours ago, and they told us that there's a huge inventory of almost 2.7 million tons that they're sitting at a price of 27 rupees a kilo. So there could perhaps be a big profit from here on as well. Would you buy this stock now, Oud Sugar?
So Sonia, that's right, and in fact if you see, as you have said, that I have pointed out that inventory and the valuation, two things are very key. In case of our sugar, we have seen 27 lakh of bags held by the company at sub 27 rupees, at 26 rupees 40 paise they have indicated. If you take the present prevailing price at 34 plus, that means they have an unrealized gain of 7 rupees per kg, and that translates to a profit of about 175 crore. And I am not expecting the prices, from here on, if it gets hardened, which is most likely, and the interest cost per month is not more than 30 paise per kg to the mill. So even if you net that off, the 175 crore unrealized gain is there in the inventory held by the company. That's number one. And in fact, if you see the small company, maybe Uttam Sugar, which is again a very small company, they also declared the results on Friday and Saturday, and if you see the PAT of 68 crore against the loss of 16 crore in the Q3. So my point is that this inventory is only held by the UP based sugar mills. You won't find these kind of inventories held by any of the Andhra or Tamil Nadu based sugar mills, or maybe it's such a sizable quantity. So yes, inventory gain has to be considered. Today we will be seeing the results of Thriveni Engineering also. Again, I am expecting that Thriveni Engineering will also be having an inventory of about 33 lakh bags as of 31st March. So yes, I am keeping my positive stance on all the sugar stocks going forward from here as well, because all these inventories will get liquidated in next 2 to 3 quarters. So you are going to see the huge kind of profits coming in for Q1 and Q2 also, which are always generally seen to be dull and boring quarter because of the non-crushing season. So yes, keeping a positive stance on few UP based sugar mills.
Okay. Thank you, Mr. Tulsian. But besides the sugar stocks that you pointed out, Mr. Tulsian also pointed out another set of mid-cap stocks, a sector, many of whose stocks will do very well or are doing very well. And that's the only hint I'm giving you before I introduce you to our Monday special mid-cap mania with Nigel D'Souza. The stock on his radar is... Nigel.
Well, Lata, the stock that we're going to talk about is Orient Paper and Industries. The stock has already had a big run, but quite a lot of interesting detail, and I'm looking to take you through that one. It's a CK Birla Group company. Its market capitalization is only around 950 crores approximately, and the promoters hold roughly around 38% stake in the company. Now, you take a look at the other holdings. Funds, they have loaded up into this one because they hold close to around 13.5% stake in the company. We have ICICI Pru in there, we have Reliance Industries, as well as Franklin Templeton that are in there, and also insurance companies. They hold roughly around 6% stake in the company. The names are up for you on the screen as well. In terms of assets, they have close to around 800 acres at Brajraj Nagar. That's where they had one of their paper mills. That's shut down. So good 800 acres over there. The management has clarified this on our channel just last week. So that's one of the assets that they have, and there's small parcels of land and buildings as well. This again, the management has told us on our channel. In terms of other assets, they hold investments in Century Textiles, and that is equated to close to around 95 crores as of today's market price. Hyderabad Industries, another listed company, over there as well, they hold stake, and as of today's market price, it holds close to around 45 crores. So in all, close to around 145 crores is what they hold in listed companies itself. But moving on, then their paperboard division gives them close to around 30% of the revenues. Bulk of the revenues though comes in from their electric consumer durables business, and that's why I really picked up the stock, because just in Friday's trade, all eyes were on Crompton. So I was looking at some peer comparisons, and if you take a look at the fans business, then Crompton has close to around 30%, 25% of the total market share, while we have Orient that's in there with around 18% market share. In terms of revenues as well, Orient Paper does roughly around 1300 crores. We have smaller players as well in there, something like a V-Guard that has only around 563 crores. But where's the catch then? Their margins, that's a bit of a disappointment. That's coming at only around 5%. And you just look at the others, they are at around 25%, 12%, as well as 13% roughly. Even the ROC, that as well is a bit of a drag, because you take a look at that one, it's only at around 16%. Havells gives you 100%. Remember, we're only talking about the consumer electronic business. Moving on to their paper business then, it was a positive this year because it's the first year in the last few years that they've given you a positive EBIT number in comparison to the last few years, and the management says it's running at full capacity. They have another some capacity that's coming on stream in this year as well, so things are looking good on that front. The only big catch is in their results there was a demand notice for close to around 474 crore rupees, so interesting to see where it goes, though the management says that they're quite confident that they'll come out trumps. Back to you.
All right, Nigel, thanks for that. So that's the mid-cap stock that we're looking at this Monday afternoon, but we should get back to the market. It's going to be a very good day for the bulls, no two ways about that. Today confirms that the buy on dips theory still holds, and we're getting leadership from one quarter or the other. So today banks of course have not performed as well, but the leadership mantle has been shifted to some of the FMCG players like ITC and HUL, and some of the technology players as well. Ashwini Gujral is still with us. He'll tell us what to buy or sell today for a reverse trade tomorrow. Ashwini, what's on your list now?
Well, banks should be bought, but only private sector banks. So IndusInd Bank is a buy with a stop of 1065, target of 1100. JSW Steel, which was extremely strong stock, that's hit its 50-day moving average and sharply turned around. That's a buy with a stop of 1265, target of 1320. And Kotak is another one that you can buy with a stop of 710, target of 735.
Okay, well, the market's still holding on to about a 0.5% gain. Sudarshan, now that the market once again found support at that 7775 mark or 7780 mark, does that line become a little more important in trading today and tomorrow if people are carrying over positions?
Well, yes, it becomes, every time it touches and bounces back from a number, in this case 7780, that number becomes significant because for two reasons. First, that acts as a stop loss for any long positions in the Nifty. If you want to buy within the trading range, then 7780 is a fail-safe stop loss. And second, of course, if it breaks on the downside, it opens up another trade on the downside.
Okay, those are Stride Shasun's numbers. A quarter-on-quarter comparison is good actually for Stride Shasun, because remember, this is the second quarter that the company is reporting the numbers with the Shasun operations post the merger. The adjusted net profit looks very good. So that's almost what, a doubling of the net profits on an adjusted basis. The EBITDA has also picked up to almost 200 crores versus 154 odd crores. The management had indicated that the US market is doing well and the EBITDA growth will be led by that. So that's a decent pickup that we are seeing on a quarter-on-quarter basis in the EBITDA, 200 crores versus 150 odd crores. I'm waiting by to see what the top line number is. I didn't see that flash, but let's see. The adjusted net profit though on a quarter-on-quarter basis is looking very good. Mr. Tulsian, we just have these two numbers. Okay, actually we'll come to you in a bit, Mr. Tulsian. We have Mr. Arun Kumar, the Executive Vice Chairman and Managing Director of Stride Shasun, who joins in now. Mr. Kumar, good afternoon. We're comparing your numbers quarter on quarter to get a fair analysis of how things have been. The top line growth looks quite good at 1,000 crores. Just take us through how the quarter has panned out for you.
Thanks, Sonia. It's been a great quarter in terms of both revenues and margins. So we've obviously managed to beat the consensus here. We had a good pullback from Q3 when we had some issues with our Chennai operations because of the floods, but then we had a strong Q4 comeback, and it's been a milestone quarter from all aspects. So we've had a solid growth across all our markets except emerging markets, where we're still flat growth given all the currency issues and other things.
Mr. Arun Kumar, you also made a bunch of acquisitions, which is why your results are not strictly comparable with the previous. Would you take us through how your various acquisitions did? The Arrow acquisition, the Australian acquisition, the Nairobi acquisition?
Yeah, so Lata, Q3 to Q4 is fairly comparable.
Okay.
So because none of the acquisitions are either were completed before 31st March in terms of consolidation, or if they were, like in the case of the Ranbaxy acquisition of the CNS branch from Sun Pharma, they were very small transactions in terms of accretion to the quarter. So the Q1Q has been a very strong growth, and that's mainly coming from our regulated market growth in Australia and in the US.
Okay, your EBITDA margins have come in at 19.6. That's much better. That's a little better than what analysts told us. They told us to expect 19%. How will FY17 look like? Will you be able to improve upon these?
Well, we don't give a guidance going forward.
No, directionally.
Yeah, directionally it should. I mean, since we've done all these transactions, we have moved our base EBITDAs by close to about 400 points in the last 14-16 months. So we think we'll continue the growth. The focus at Strides has always been the growth of margins, and I think we will get there. Now you need to consider that a large part of our business this year had an API business where our margins are very low. In spite of that, we have got close to a 20% EBITDA margin, and that's because the rest of the formulations business are doing well. But we've also managed to improve our API business margins, and we think we'll continue that momentum. So overall, and we also believe the emerging markets will come back because all the course corrections were done since over 3 to 4 quarters. So that will add up nicely to the EBITDA growth. So yeah, we are all very excited about what the next year could be.
Okay, well, the stock is a bit under pressure now. It's down about 1% after that initial reaction on the upside. So let's see, there's something that is worrying the street, or maybe it's just profit taking. But Mr. Kumar, you were telling us about the growth that you've seen in US and Australia. Can you give us the exact numbers? What was the growth this quarter in those two markets? And going ahead, what kind of sustainable growth do you see?
So we don't split up revenues of regulated markets by market, but we can give you our total reg market last quarter was 375 crores, and for the whole year it was 1,100 crores. So that's over 100% growth over the last year.
And wanted just to ask you about the inspection of your Bangalore facility. When do you expect approvals to come in for the same?
So we had an inspection recently. We had minor 483s which have been addressed. So we expect the inspection closeout to come across to us in the next 5 to 6 weeks, if not earlier. So that's what we assume. It was a very minor correction which we already completed.
How much would institutional business now constitute?
Institutional business has been the stellar performer this quarter, and that's mainly to do with supply chain disruptions across some of the other suppliers, and so we benefited from that. It has been our strongest quarter and best yearly performance. So we delivered close to about 600 crores of the year, and this quarter we had 200 crores, little over 200 crores.
All right, we'll leave it at that. Thanks so much for joining us on the show. That's the word coming in from Stride Shasan. But we need to get back to the markets because we have just about 5 more minutes left to close, and it seems like it's going to end closer to the high point. The Nifty Bank and the Nifty itself have risen quite a bit in the last half an hour or so. Let's get an insight into the dealing room chatter now. Nimesh is here with Trader Talk. Nimesh, what are you picking up?
Hi Sonia, so no specific reason for this intraday reversal of trade in the last half an hour or 1 hour of trade, but the one feedback that I got from most of the dealers is watch out for the data from the exit polls which will be announced today evening for the 5 states. Now that's something which probably could lead to, could be the reason for this intraday reversal, because the sense I'm getting is that maybe some data is leaked out and there is a sense that BJP is going to have an upper hand in some of the states. So maybe that explains the kind of rally we've seen. But nevertheless, from the market's point of view, the rally was largely led by the private banks, some of the large cap names like ITC and Lever, so watch out for those stocks. But still the sense is that the FI flows are negative in the cash market, so there is this risk of going on globally, and it's impacting India as well. Still, the broad sense is the Nifty is going to be in the range between 7650 on the downside and 7950 on the upside. So there is no big trigger for the market to go up beyond 7950, but possibly for today's move, watch out for, maybe we'll have to watch out for the exit poll data very closely, which will be announced after 5 p.m. today. So that's something that I've picked up, but otherwise it's a range bound trade with some stock specifics doing well again in today's trade.
Okay, that really sounds interesting because we are kind of recovering alone. Europe is still pretty much in the doldrums, as it were. Asia saw some bit of minor recovery after the initial Chinese data, but our recovery is a bit spectacular, you will have to say, especially in the Bank Nifty, and therefore this looks perhaps relatable to what we will get from the polls. Let's wait and see how the exit polls turn out. Neeraj Diwan of Quantum Securities has also joined us now. Neeraj, good afternoon to you. Well, what did you make of the manner in which the market has turned around? Are you a buyer on dips? Do you think this market will refuse to go below the 7,600, 7,700 levels?
Yeah, good afternoon. I think there's a good reason to believe that band of 7650, 7700 should hold for the market. Even if you see the results which have come, barring the PSU banks where we are still seeing that continuous stress on the balance sheet, I think things like private sector banks, stocks like Maruti, Asian Paints, they've all come out with a good set of numbers, and now with the dollar strength, even IT stocks are doing a little better. So they'll also contribute to the markets on the way up. But I think the market is in a band, so that 7950, 8000 is also a barrier which will cross only if we get some new set of good use of the market. But I think that lower band definitely of 7650, 7700 should hold for the time being.
Okay, we have 3 more minutes to go, so let's try and squeeze in a couple of more last questions. Mr. Tulsian, I wanted your thoughts on India Bulls Real Estate. I mean, that stock has been hitting new highs every day ever since it announced the merger of that India Bulls Property Investment Trust with itself. What effect do you think the consolidation will have on the merged entity as a whole, and how would you approach that stock now?
See, Sonia, I expressed earlier also my view that I see 2 reasons. One is of this merger. No doubt that the debt on the consolidated basis in the books of the company will rise, but that will, see the volumes also seen surging quite high. So that could be one reason. Number 2, the increase in the FSI, because if you see the plans, which has been proposed by BMC for Mumbai city, they are planning to increase the FSI from 1.33 to 2. And if you see the projects of India Bull, they have a very strong presence in the central Mumbai, where the development works are still going on. So they are seen to be the beneficiary of those things as well. But let's not forget that the stock has moved from 54 to 84, maybe in last just 1 month or maybe 45 days. So that has in fact taken, maybe the stock should take little pause here, and may go from in the second round of rally from there on. But yes, for the time being, maybe for next couple of months, I expect that stocks to consolidate, but continue to have the positive view on the stock.
Okay. We just have a couple of minutes, actually only 1 minute. Mr. Tulsian, did you look at the NBCC numbers? The margins have dropped a goodish bit to about 7% from 9%. Otherwise, the numbers seem to be in line. You would still be a buyer in that space?
Lata, numbers are seen flat. I am not impressed with the numbers, and I am in fact unable to, that is what I have been maintaining my view. I am unable to understand the positive bias, taking on this stock, because whenever you see the managements, their contracts work and all that, which are given by the government, and they get some area for selling, always the figures of next 4 and 5 years are aggregated and, presented in such a manner that they are going to post the excellent growth. This is just another construction and development company, or maybe you can call it as a real estate company, those who are developing the property as well. So I have not found anything attractive, number 1. Number 2, you have the dilution or maybe the offer for sale by the government also. Once that happens, the increased float can make the prices to fall further. So I am keeping my cautious view on the stock and not impressed with the Q4 now.
Okay, Alright, we just have about less than 1 minute to go, so let's wind down the day's trading action and then we'll go back to our guests. The bulls were in control today, no 2 ways about that. So it was a good day for the market. It was a buy on dips day, and the Nifty recovered 90 points from the lows of trade. So that was a big heartwarming sign for the bulls. The cash market volumes are also high, by the way, more than 15,000 crores of cash market volumes. So be sure to get some more buying action from the domestic institutional investors, a trend that we have been seeing over the last many days and weeks. The private sector banks were clearly the stars today. So Yes Bank, HDFC Bank, Kotak Mahindra Bank, IndusInd Bank, all hitting new highs. The FMCG stocks also participated. ITC and HUL were the big gainers as well. And a couple of these pharma names were not too far behind. So Dr. Reddy's and Lupin were up about 1%. Asian Paints too hitting another new high today. So up at 950 rupees for Asian Paints. And Z Entertainment, the last time I checked, came in for a mild bit of profit taking. But that one too has been hovering close to record highs. On the downside, the Bank of Baroda was clearly the stock of the day, down 8.5%. After what was a dismal performance this quarter. SBI was not too far behind. It comes out with its numbers on the 27th of May. Ahead of that, the stock has been under quite a bit of pressure. And a couple of other names from the telecom space like Idea Cellular were down about 1.2%. But all in all, a good day of trade.
Oh, absolutely. Considering the way we started and considering the way the world is performing, even now the way European markets are performing, you will have to say that this is a very good day of trade. Yes Bank takes the honors completely. It's up about 3% at close of trade, and now almost touching the four-figure mark, 980. I mean, this is like 3 times book. It's coming very. It's a huge gain from where it started off just before the numbers. So the Yes Bank re-rating simply doesn't seem to end, as it were. And then of course Bosch and ITC are among the other stocks in the top in the heavyweights, which have done very well. Dr. Reddy's came in for some decent amount of buying, but it's in the mid caps that you have a wide variety of stocks that have done well. Indiabulls Realty has been spoken about enough. Among the others that have done well, Kaveri Seeds has done well, Orion Pro, SKS of course, that was on the buy list of both Ashwini and Sudarshan in morning trades. That continues to do well. Page Industries came in for a goodish bit of buying. That's up about 3%. Mangalam Drugs announced its numbers. That stock also has been well received. That's up about 3%. I spoke about Page, Rupa and Company is also doing up about 2.5%. So bunch of stocks largely consumer oriented that have got buyer attention today. Market ends with about 0.6% in terms of gains, 7860 for the Nifty. The mid cap is absolutely flat, but in terms of advanced declines, it's 1:1. It's not as if it's a huge number of stocks that are declining. It's almost 1:1. The decliners have a minor edge. That's it. Neeraj, any numbers stood out for you? Anything that the market is still not valuing correctly?
Yeah, I think a couple of mid-cap numbers which came last week, like Manappuram Finance was one, which were very good set of numbers, and the kind of ROA these gold loan companies are doing now, about 2.25, 2.5, and they're still trading at 1.5x. I think there's still more upside to these companies, Manappuram being one of them. And even DCM Shriram Limited came with a good set of numbers. So their mainstay, they are expanding capacity there. Plus sugar is now started contributing for most of the UP mills. So that will also add to the profits going ahead. So that stock also, based on the numbers, looks very attractive going ahead. Then there's Apollo Tyres, which we tracked, where the numbers this time were not very good. The volumes were a little low. But next couple of years has a lot of things going on right for Apollo Tyres. New capacities are coming. Europe can stabilize. So there, I think going ahead, it's come at an attractive price after the recent correction that happened in Apollo Tyres.
Okay. Well, Mayuresh, what about you? If you had to pick one stock in the mid-cap space that you would buy now post numbers, what would it be?
Again, I think continuing the theme that Neeraj was discussing on tires, I think TVS Sri Chakra is something that I genuinely like over the next year and a half, 2 years. What we've seen in terms of volume growth, I think they'll be able to maintain and manage that. What has happened with raw material cost, I think that has taken a large part in terms of how earnings have panned out, and one really assumes rubber prices that have gone up significantly over the past 2 quarters. My own take is that it is going to be volume growth driven at this point of time. Their tie-up with Michelin is going to aid the volumes as well as the top line in a significant manner going forward. They're targeting the export markets, which is again a huge plus for the company in terms of how their earnings growth will pan out. Valuations again not too expensive at this point of time. So if I have to lay a bet out the next year and a half, 2 years, I think TVS Sri Chakra will have strong rebound in volumes, two-wheeler market share gains keep on increasing, and again export markets will ensure that the earnings momentum is maintained over FY18.
All right, gentlemen, thank you very much for joining me. But let's end with one high note. Yes Bank. Ashwini, will you still climb on to this stock? Okay, I think we've lost connection with Ashwini. Sudarshan, would you still climb on into Yes Bank?
Absolutely. If I am an investor or even a position trader for a 6-month time frame, at current prices, it has a lot of potential for growth, price appreciation.
Well, on that thumbs up note, gentlemen, thank you very much for joining us with this conversation on Closing Bell. Let's also get to the Closing Bell money control question of the day.